I've got change for us all. Is no restart.
Big move in Bitcoin then, in contrast to all the notes I wrote pre-show, which were telling me that this was going to put Bitcoin under pressure. What's
the narrative that perhaps this launch of these political meme coins will sap flows from Bitcoin is showing us that it's really not the case this morning. If anything, it's just accelerated the momentum and the excitement around cryptocurrency under another tough administration.
Hi, Dewald. What is all this FOMO about? Should I buy Bitcoin now?
Are you smoking your socks? You should rather watch my show. You should rather watch my show.
Right. Welcome, legends. I did not plan to do another live stream today, but it's miserable outside, it's raining, and I thought, okay, let's do a community live stream today, right? I will go through I will try and answer as many comments as I can, because every time I say I'm going to go through all the comments, I just run out of time. People just ask too many questions, but I will try my best to get through most of the comments. Right, legends, this is currently a mini structure that I'm watching here on the price of Bitcoin. Remember, I always say, legends, regardless of whether we're going down or whether we're going up, you can apply your trading strategy, right? So I was watching the breakout over here, okay? This momentum on the 5-minute time frame, watching the momentum here to the upside. I did not play the breakout, okay, because we broke out and then we started falling here to the downside, and it looks like we might be forming a little bit of a bullish pennant. The maximum target has to be the 786. If we break out, or we dump and we bounce and then we break out, this is where I will consider a small little scalp to the upside. Okay, so patiently waiting for price to show me the way. Okay, so we are not getting acceptance back inside the trend. We had a little weak here to the downside, got bought back up very quickly, and now we're still tumbling down here, right? So maybe we tap that 786 and then we break out, and that is where I want to get in. I'm not interested in this small little scalp trade until we break the trend to the upside, which reminds me, I need to put an alarm on that trend, because okay, if it's going to break out and front run me while I'm busy doing technical analysis over here, I don't want to miss out on this potential trade. Let me see. Yeah. Okay. Right, legends. Yes, let me go through some comments. I've got a new setup for comments. You guys need to let me know if you prefer the setup. And let me first see if it's going to work. I have tested it. And I just want to see what it is going to show here on the screen. There we go. There we go. Okay. Right. Let's go through some comments over here. Okay. Woo. I love Dewald, my favorite YouTubers. And Pete Beach, thank you so much. I really appreciate it. Garisha, answer this. When will my strategy stop working? Till I keep it as a secret? Okay, I have read through your comment just before the live stream started. I just want to highlight, there is no strategy in the world, a trading strategy, okay, I'm using the word trading strategy, in the world that is 100% successful, even if you are the only person that knows about that trading strategy. The market is unfortunately designed in such a way that there's a couple of podcasts that I actually listen to. The market is designed in such a way that every single strategy can be successful if you apply the rules to them okay? You backtest them, you stick to your rules, you are disciplined, they will be successful. Every single trading strategy. The problem is not the trading strategy. The problem is usually the person behind the trading strategy. They jump from trading strategy to trading strategy. They do not master any trading strategy because they think they're losing money using a specific trading strategy. So there's a problem with the strategy. It's risk management at the end of the day. It's people not knowing where to take profits, and it's people not building in rules into their trading system. Okay, so it's not about keeping a Gorisha. It's not about keeping a trading strategy secret. Okay, I have personally not seen a 100% successful trading strategy unless it's a scam. My brother has been scammed. I'm not sure if he would like me to share this, but he's been scammed in a 100% successful trading strategy out of a lot of money. Okay, if it's too good to be true, chances are it's too good to be true. Right, let's go through some more comments. Let's go, legends. Why do you feel like why do I feel like we might have bottomed? People are not selling even after all those negative news. Yeah, definitely. There's a chance, and I will go through the bullish case scenario. There's a bearish case scenario with the highest probability. But then there's also a bullish case scenario, because a good technical trader needs to have a bullish and a bearish case scenario. That's just how it works, okay? So I will go through both scenarios, which equally carries 50% probability at the moment. All right, there we go. There we go. Now, okay? No, not yet. Not yet. Let me go check here. CVD at the moment. Yes, we do have some bullish CVD. That's beautiful. We do have some. Yes, we do have some bullish CVD. A little bit of bullish CVD. Not a lot, but we have a little bit of bullish CVD. Now what I'm waiting for is for that 5-minute candle, okay, to close above the trend. Because that's my rule. Sorry, legends. I am on my comment section, right? We've now tapped the trend over here. Okay, my alarm went off, but my trading rule for this trading strategy states that at least the 5-minute body of the candle has to close above my breakout line. If it fails to break out above, I do not enter the trade. So I have to follow my rule. I'm not going to just enter. I'm waiting patiently. Okay, and there's still 3 minutes left for this candle to close. Can it run up here? Of course it can run up here, but then I have a better confirmation trade. Okay, so just going to be very patient, because it can definitely reject and fall to the downside, and then you're going to be very glad you didn't enter over here and you followed your damn rules. Okay, right, legends. Let me do a little bit of technical analysis. I will continue through the comments in a moment. Hi, Dewald. Anthony, welcome to the stream, man. I see people are popping in here at the moment. Does S&P 500 could dump more? I actually have not looked at the S&P 500 in a while. I know that they are correlated. Someone did ask me the question a couple of days ago, and I only saw it after I finished the live stream. Dewald, do you look at the S&P 500 or the NASDAQ to take trading decisions on Bitcoin? And my answer is no. I used to, not anymore. Okay, there's a very experienced, high-profile trader, very successful, that told me once, Dewald, trade the chart in front of you. The more things you take into consideration is going to create analysis paralysis, and you're going to get stuck, and you're not going to know whether you should short or whether you should long. Trade the chart in front of you. So I trade the chart in front of me, and it has proven to be very successful. Oh, currently getting the breakout. Very nice breakout. I have a feeling it's going to come back for a retest. Right, legends? If price runs away from me, no trade. It's also part of my rule. If it runs away from me, okay, if price runs away, let's just say you get a guard candle here to the upside, it runs away from me, no trade. It's part of my rules. Okay, if we now close the 5-minute candle above and I get a retest, oh, now that looks nice, then I'll play the retest. Okay, then I get a better entry. Right, so I'm just following my rules over here, sticking here on the 5-minute time frame. Right, I closed my comments here by some reason. We do that. Here we go. Dewald, my bro, was subscribed to you when you had less than 150 subscribers, And so happy how far you have come with consistency. Learn so much from you and still do. Lekker van Dubai. Wow. Mokus. Sorry, I'm not sure how to pronounce your name. And thank you so much. Yes, I remember the days when I had 100 subscribers, 50 subscribers, right? It feels like a dream to be where I am now, where I almost have 6,000 subscribers. But I love doing this. I love putting the puzzle pieces together. And I think everyone that enjoys technical analysis will say the same thing. You know, it's about looking at this structure and putting the puzzle pieces together and figuring out, is it going to go up? Is it going to go down? Because that's all that the price does, right? It goes up and down. And yet we stare at these candles like it's candy from heaven, okay? Like we're playing our favorite game or watching our favorite movie. And it's about putting, you know, I like to figure it out. Why did it bounce over here? You know, these are the questions that I asked myself when I first started out. Why did it exactly bounce over here, right? Why did it reject over there? Like I try to put the puzzle pieces together, and even today still I'm putting the puzzle pieces together. Right. Well, I can tell you guys now why we bounced over here from that little line that I have over here. Okay, so if I go here onto the 15-minute time frame, we got an SFP from the lows. Beautiful little SFP from the lows. You can see that price action, we had the lows, dupe, we had the low, you dip below, beautiful swing failure pattern. You get momentum up, you enter like a sniper. You enter like a sniper. You have to be quick. You have to be experienced. You have to enter like a sniper. You put your stop loss below the low. God damn it, it's such a beautiful stop loss. Okay? Even if you get stopped out, it's like you're losing almost nothing. Okay? Beautiful stop loss. And you got this beautiful momentum here to the upside until you hit resistance. What an amazing trade over here if you played this swing failure pattern. Okay, this little attempt is another attempt to get into the trade because the market is often designed in a way that it gives you another chance to get into the trade, like perhaps it's doing right now. Okay, looks like it's breaking out successfully. The bullish pennant is working out, right? I actually got this question inside of our Legends Pro community a little earlier on, where someone asked me, okay, well, there was a trend running here to the upside. Which one do I play? We're breaking out here, but we're losing this momentum. And for me, the rules that I follow is that, well, if I'm looking at this trend and I'm planning to take a long and I break out and price does not get acceptance back inside the trend like it did last night. Okay, you saw what happened last night. We got acceptance back inside the trend. You get out as quickly as you can. Okay, and then often it builds this nice little bullish pennant. Beautiful little bullish pennant, okay? And look at where it bounced, golden pocket. So you have momentum to the upside, you bounce in the golden pocket, and you break the bullish pennant to the upside. Now, profit-taking areas. This is where a lot of people struggle, okay? I nailed the entry. Damn, I nailed it. This is the trade. This trade is going to fly. No, you have to identify your resistances to the upside. Okay, and the first area of resistance is the highs. This is your first area of resistance. Okay, and it might seem like, but it's not worth the trade, but it's still resistance at the end of the day. Okay, and that is where you need to plan your trade to see if the risk to reward makes it worth it for you. So I can tell you guys now, if I had to enter this trade, so this now needs to be red. Okay, you have to plan your trade. And you have to be quick, right? You have to learn these tools and you have to be sniper, right? So let's say you played the breakout over there. You're targeting the high. Let's say this is your trading scenario. Remember, because, okay, this is what makes this trade so beautiful. Because you played the breakout over here, your stop is supposed to go below this low, which now makes the risk to reward worth it. Beautiful trade, okay? You tap it, you could close your position. Successful trade in the bag. If it goes higher, maybe you leave some of it. Maybe take 80% profits, leave 20% open. If it goes higher, then at least you don't have to FOMO into a trade. You still benefit from the momentum to the upside. But please, guys, pay yourself. Okay, you have to learn to pay yourself. So many people don't pay themselves. Another area of resistance here to the upside. Okay, is the underbelly resistance over here. There we go. There's another area of resistance. So there's a chance if momentum continues here to the upside, okay, it smashes through, it actually shows signs of strength, and it goes to the next level. There's a TP2, TP1, TP2, right? And obviously the highs will be a TP3. Can it go to much higher levels? Of course it can go to much higher levels, but that is not what trading is about. Okay, trading is not about how high and how perfectly you nailed the entry. And when price is over here, you share your P&L inside of your communities and show off the trade. Because I can tell you, you're going to win maybe one or two of them. You're going to show off those amazing P&Ls. But if you keep on waiting for levels like this, okay, price is more than often going to reverse on you. And you're going to get stopped out, stopped out, stopped out, stopped out. And then you bleed out your account slowly but surely. Okay. Cool. Like I said, legends, I want to spend a little bit of time on comments. But first thing also I want to discuss over here is that, okay, I'm not sure. Let me know in the comments. Did anyone take this trade that I was talking about here on the 5-minute time frame? I missed it now. If we come back for a retest, I will consider entering. If we don't come back for a retest, I missed it, right? I'm here on the live stream, sharing my knowledge, sharing my trading strategies with you. And this legends, break of trend, the bull flag, the breakout over here, the stop below the low, or you play this breakout, you put your stop below this row. This is a trading strategy. You can make money simply by applying this one trading strategy. There's no Elliott wave theory in here. There's no Fibonacci's in here. What you have to learn is to place your trends, okay, successfully. You have to go and back test it so you make sure how to. Believe it or not, it's a simple trend line, okay? But still, some people still stuff up the trend line and they play breakouts that they're not supposed to be playing because they had their trend at the wrong place, whatever the case might be. The rule for the strategy is the more touches you have, the better and the stronger the trend line. So usually 3 touches is a nice little trend. That is what I call an A trend. 4 touches, 5 touches, then it becomes triple, A plus. Okay, the trend becomes better and stronger the more touches it has. If it's a 2-touch trend, okay, it's a B trend, right? And depending on whether it's an A trend or a B trend, I have rules built around that. If I have a second touch and price just decided to break out over here, okay, and it's a B line, it's a B trend line for me, I will use 0.5% of my capital to play this trade. That's my rule. If I have 3 or 4 touches, I will use 1% of my capital. If I have 4 or 5 touches, I will use 2% of my capital because it's a better trend. It has a higher probability of breaking to the upside. Okay, then you combine that with bullish and bearish CVD. You can, the list goes on. But for me, the best breakout strategies is where you form these little bullish pennants. Okay, is price breaks out and it falls down. And now whoever played that breakout starts getting nervous. Oh crap. Oh crap. I should not have played that breakout. Okay. But as long, now that's the rule, as long as it doesn't get acceptance back inside of the trend, it's still a valid trade. You can take a fib from the low to the high. Okay. And if it has that 786 maximum bounce, it's still valid. Okay. Right. It looks like it wants to come back for the retest now. I'll see if I'm going to attempt this long here to the upside. Often it gives you another opportunity to get in. Okay. Right, legends. So basically what I wanted to highlight here is this is one trading strategy. It is never guaranteed that you're going to come and take the high over here, because I think that's one of the biggest mistakes that a lot of breakout traders make, is that they see the breakout and they automatically assume you're going to take the high. So this is always the TP area. You have to remember that we are in a downtrend. Okay, you have to take the trend into consideration as well. Look at this. The trend is down. Okay? You are trading against the trend. If you are trading against the trend, you need to be very selective about your longs to the upside. Okay? And you also need to make sure that you are able to identify resistances. Okay? Your resistances. And resistances. This becomes TP1, TP2, TP3. And yes, not all your trades are going to play out to perfection, but I can guarantee you, you do enough of these and you stick to your rules. You do not break your rules. You stick to your rules. You do enough of these, you will win more than what you lose. Okay, the problem is people break their rules. They lose a trade and then the next trade they go in with more capital, more leverage, okay? Because now they want to claw back the losses that they made for the previous 3 that they've lost, for example. As soon as you start breaking your rules, then the wheels just come off. Or maybe another rule could be, you get stopped out. If I get stopped out twice with a loss in a day, I don't trade for the rest of the day. I go do something else. I come back tomorrow. You break that rule, you start revenge trading. Okay. Right. Let's see if we're forming some bullish CVD with this momentum here to the downside. Oh, no bullish CVD. No bullish CVD. Okay. No bullish CVD. Right. Cool, legends. Now, let me go through a little bit of more comments and then I can go through a little bit of larger time frame analysis. Okay, there's something else I want to discuss with everyone. But I mean, what a beautiful swing failure pattern. I'm not sure if anyone played the swing failure pattern over here. A beautiful swing failure pattern. Okay, and a beautiful trade. It hit resistance to perfection. You enter. I mean, it's such a beautiful trade. Swing failure patterns is another trading strategy. But swing failure patterns, they also have every trading strategy has pros and cons. And you need to decide which one suits your personality the best, okay? Some people love breakout strategies, like the D line that I've just explained over here. Some people hate them, like Andy. Andy hates breakout strategies, but he did play one last night. But nonetheless, he knows about them. He knows the rules around them, okay? And then for me, swing failure patterns are beautiful because of the risk management. I mean, if you got into this trade, what a beautiful trade here to the upside. Even if you're a little bit late to the party, okay, you're targeting resistance. Okay, there was obviously resistance, which I've just identified. I mean, that stop loss is 0.17% away. What an absolute stunning trade. 7.85 risk to reward. Okay, if you were disciplined and you followed your rules, you entered maybe a little bit late because you weren't sniper enough, but you got in with your stop below the low, you identified your resistance, and you closed your trade, you would be a happy camper right now. You would be a very happy day trader today. This is the trade that sets you up even for the week, okay, depending on how big your portfolio is. Right. Cool, legends. Let me go through some comments. I am in a short, and while at work, I saw the support and a ISOP setup, then I entered with the same amount as my short. For now, I keep the short. Awesome, you're hedging over there, right? Got some success when I use a trailing stop after TP2 and an SL tie close below TP3 and let the run. Yeah, that is a really good strategy, okay? If you want to prevent FOMO into a trade, so maybe you played this SFP that I've just highlighted over here, and you know that there's a chance that it can maybe this is an A, B, C flat. It's going to come and take the highs over here. And you want to leave some of the position open. Like you said, maybe you take 80% over here and you leave 50%, 15% to run. If you get stopped out, you have still 80% profits that you took. So beautiful strategy. I also love to do that sometimes. Just leave some of the position open. Okay, it calms the FOMO. It really calms the FOMO. Right, legends. Let me try my new setup over here. Okay, let me try my new setup. Let's go. Right. We still have 80 million liquidations, around $88,000. Ooh, $88,000. Yes, it's there above, I know. And it's building up. Maybe the market makers want to make it more before they go and grab it. Okay. Legend. But needs to be on the card to maintain it. I am in a... okay, I've gone through that. Right. Are these the comments? No, I'm sure there's more comments at the moment. Right. No, this can like to be the comments at the moment. 1.618 bounce. Yes, that's where we got the bounce at the moment. Okay, we're coming back for the retest. It looks like at the moment. Hi, Dewald. How do you find you in the point of controls and daily, weekly levels? Mervin, what I would recommend, if you go to my YouTube channel, okay, I have a tutorial. Let me just do this. I have a tutorial section over here. If you go to my YouTube channel, I have a tutorial section with loads of alpha and education. How to start my D-line strategy that I often speak about. Okay, how to trade on Mexi, the full moon if you're a DCA addict like myself. Okay, how to make gains. And yeah, I've got a little tutorial over here. Okay, trading education, daily, weekly, and monthly levels. Go check out this video. It's a very old video. It's not professionally done, but the education is there. Okay, it will show you exactly how I put daily and weekly and monthly levels. Okay, so that I don't have to spend some time now today explaining that. Just go check out these tutorials. And right, risk management. Not a lot of people talk about risk management. Let me just move my face to the other side. Wait, this one. Right, risk management. I've also got risk management over here. Not a lot of people speak about risk management, and this is where I explain risk management in a little bit more detail. How do I execute risk management? Okay. Right, got it. Thanks, Dewald. Absolute pleasure. Let me just put my face here back. Let's go back to the chart. And how is this trade playing out? Is it gonna stop us out? Or is it going to give us a beautiful retest? Okay, right. What is important about this little retest is that it needs to make a higher low. Because what you now want to see over here is a pump, a higher low. You want to see a 1, 2, 3, 4, 5. Okay, if it takes the low, I mean, it's going to stop you out, right? And then it might bounce on the 786 and break out again. But, you know, you just have to stick to your guns. You have to let your trade play out. Right. It's just a pity that there's no bullish CVD building up at the moment. No bullish CVD. There was bullish CVD against those two pivots. But now with the retracement, there's no bullish CVD. But yeah, I just usually leave my trade, let the trade play out. Okay. Cool. Now, hi Dewald, great TA and trading advice. Have been following you since day one. Liked what you were saying about 1% the other day. People don't get how wealthy you can be if you can do 1% a day. Yes, I mean, if you can make 1% a day, that adds up, right? Maybe you make 20% or 15% a month on your portfolio. Dewald, can you show us trend fib time for the triangle if it was an X? Oh, okay, right, I'm with you. I can do that. Dewald, did you saw the candle to 100K on weeks? Woo! 100K candle on weeks? Let me check. Do I have my weeks account open here? No, it's not on my profile, unless they fixed it already. Okay, or were you talking about the one that was there the other day? Okay, was it the one that was there the other day? I remember that there was a 100K week about a week ago on weeks that I saw. I'm not sure if you're referring to that one or is it one that happened today? Not sure. Okay, but I saw that candle on weeks. Yes, I also saw that candle on weeks, but it wasn't today that I saw it. It was a couple of weeks ago that I saw that 100K candle. Yes, crazy week to 100K. But the weeks team after that candle happened, sent out a communication, email communication to all of the users and said, if you have been negatively impacted by that week, they will refund you. They do have a user protection fund. And they said, here's a form. If you've been negatively impacted and you got liquidated, they will refund you your money. So, you know, it was great of yesterday. I didn't see it yesterday. I didn't see it. But I can guarantee you guys that if you did suffer a loss because of that week to the upside, well, if you went along, you're going to keep quiet, right? If you went along and you took profits at 100K, you're going to keep quiet. But if you were in a short and you got liquidated for whatever reason, they will refund you your money. You can contact support. I know for a fact they will sort you out. Okay. Right. Yesterday. Okay. I saw. Okay. Cool. Legends. Now, what I want to discuss. Okay. Let's just hide this for now. Okay. I can take all of this out. I can take all of this out the way. And what I want to quickly discuss here on, let's go to the 1 hour time frame. Okay. Let's look at the structure. Actually, let's look at the 4 hour time frame. Let's look at the larger WXY structure here to the downside. Okay. This, unfortunately, is still the scenario that carries the highest probability, ever so slightly, compared to the bullish case scenario. Okay. Where you have formed, just look at the blue, very easy. A W, X, okay, which still needs to extend, in my opinion, which still needs to extend, okay, and then you're going to get a Y wave to the downside. After X is in, you're going to get a Y wave to the downside. So this is the bearish case scenario that I think carries the highest probability compared to all the other bearish case scenarios. There's other bearish case scenarios as well that actually goes down a lot further, but there's many things wrong with the structures that I don't like. This is the structure that has the least amount of mistakes. Okay, when you study Elliott wave theory in a book, the pictures of how the patterns look from is absolutely crystal clear, perfect. But when you need to apply the theory to a live chart, okay, you always find mistakes. Like, but you know, this B wave went to a different target, or the triangle doesn't look like the way it's supposed to look. There's always a couple of mistakes that you have to consider, and it's the one with the least amount of mistakes, okay, that becomes the highest probable scenario. And this one is now the highest probable scenario. Okay, right, legends. This is a scenario that I have been discussing forever, right? Since we were here, I've been discussing this scenario. Okay. And now it looks like it's building a triangle. Your X wave can form a triangle where we have formed A, B, C. I don't think D is in just as yet, but I mean, I did discuss the possibility of what if D and E is in, and we're just going to collapse here to the downside. It doesn't carry high probability, and I also saw Koens talk about this today because of how complex the C wave is. The structure in here is a very complex C wave, and the rule for a triangle states that you are only allowed a complex corrective structure in your C wave. Your A, your B, your E, and your D needs to be simple three-wave corrective structures. Easy to understand, easy to count. Okay, where if you look at, and this is something that Koen spoke about this morning as well, and I mean, 100% agree with him, is that this structure here to the upside is an incredibly complex corrective structure. If you go here onto the 15-minute time frame and you try and count this structure here to the upside in a three-wave structure, it is incredibly complex, which tells me that maybe it is as simple as the following. Okay, because this is how I had the scenario initially. D is now in the making. E still needs to be done because now, using Fibonacci retracement. Satoshi, I will definitely do. Dewald, instead of stressing with Elliott wave, dedicate a video on using Fibonacci retracement. Good idea. I will definitely do that. Right? I just want to show everyone, because I know there's bearishness in the air. People are panicky. People are fearful. And I just want to show, well, where could price potentially go to and where can we bounce? I did get the question earlier on in the live stream. Dewald, how low can we go if we do reject? Okay, so let me answer that question. Is that I think the triangle is still going to extend. Right, there's your triangle to the upside. And your triangle to the downside is still going to extend a little bit lower. Because now the structure makes a lot more sense. Okay, because now you have an ABC. Okay, I'm not going to draw all the waves. I'm just going to draw it in here. You have an ABC and an A. You have an A, B, C, and a B. Simple three-wave structure. You have a complex corrective structure in a C. And now this could be forming that A, B flat. Remember, I spoke about the B flat this morning. A, B flat, and this is forming a C wave to the downside. And I have discussed this morning. Okay, then this is a simple 1, 2, 3 done in your D wave. Then you should go up for a 1, 2, 3. It must be a simple structure in your E wave. After the E wave is in and it does not successfully break the trend, you can expect this. And I'm specifically using the words if it does not successfully break the trend, because there is a bullish case scenario where we continue. Okay, which I'll get to in a second. Right, so if I now go and measure out the structure and I take a trend-based fib, how low can we go? From the high to the low of W to, I don't know where the E wave is going to end, so I have to guesstimate it over here. Let's just put it there for now, right? Your Y wave to the downside has a minimum target of the 0.618. which is $66,906. This is your minimum target. The most common target is the 1-to-1 extension and the 1.236. Okay, so if I now go here onto the 12-hour time frame, we look at the entire structure. Okay, this is where now it becomes very scary. If I take a fib here, fib from the low, okay, to the high, drag it across. The danger about this damn Y wave, okay, is that if you're going to tap the 1-to-1 extension, you're tapping the 0.88, which is still fine, but it increases the probabilities of taking the low. So ideally, you do not want to get here, and you want, okay, your 0.618 target to get hit. Right, so ideally, this is where you're going to get the bounce. Also, in the golden pocket, you have the golden pocket that can provide support. Okay, when you take the fib from the low to the high, you have the 0.618, and then also you have the 786, which is a target a little bit more rare, but it's in perfect alignment with the other 786 from a fib retracement perspective. So in this zone is where you would like to form that higher low. And then, after you have completed a WXY in a three-wave structure, guess what? You continue up and we continue the bull market. I don't particularly want these levels to be taken because you're going to start breaking macro market structure. So this is a danger zone. This is the preferred area where the Y wave needs to find support. Okay. There's also a rule that states that the Y wave does not necessarily have to hit a target, because I have seen Y waves do that. As long as the Y wave takes the low of W. Okay, there's the low of W. Here's the low of W. As long as the Y wave takes the low of W, it is still considered a valid Y wave. So it doesn't even have to fall this far. So anywhere in this zone, your Y wave could end in a three-wave structure. This, ladies and gentlemen, is the most bearish, bullish structure, if that makes sense. Okay, and the reason I'm calling it a bearish, bullish structure is because you are still going to form a higher low and continue and claim the highs again. Because this structure has now corrected itself in a three-wave structure, and then it continues to the upside. So it is a bearish, bullish structure that does not claim the lows. Okay, now let's go and look at the bullish case scenario, because I mean we always have to have a bullish case scenario as well, right? There's a chance, still, unfortunately, there is still a chance. If I look at the 1 hour time frame, okay, that this structure can still be bullish. We have 5 waves to the upside. Beautiful. Okay, because a good Elliott wave trader always has a bullish and a bearish case scenario. This is the bullish case scenario. The low is protected. We have 5 waves to the upside. This is an A, B flat, and a C. 3-wave corrective structure. You want to form a higher low and continue to the upside. You're basically going to break out of that triangle. That's what I'm saying. That's what I said, legends. Pay attention, because this could be the D, where you form the Y to the downside, or this is going to be a successful breakout where this becomes 1, 2, 3, 4, 5. ABC, 1, 2, 3. It just continues to the upside. Okay, so there's always a bullish and bearish case scenario. The most important thing about this structure is that when you take your trend, okay, where we faked out from, let me make it a little bit thicker so we can all see it properly. Okay, when you look at that trend, whatever price does here at the bottom, if it starts moving up, back up again, and it gets to this trend, this is going to be a very critical decision moment. Because if this is an A, B, C, D, E, your E over here, your E is not allowed to take the high of ABC. It's not allowed to take the high of C. And unfortunately, that level is a little bit far away. But if you're going to get a successful breakout over here and you take the high, you significantly increase the probabilities that the low is in. And any retracement is potentially going to be a great load-up zone for continuation back to the upside. So if you are sitting on the side with cash and you have not bought anything just as yet, you want to see Bitcoin, you have to be patient. You have to see Bitcoin take this high. This is what I highlighted yesterday as well. We almost took it. Boy, oh boy, if we took that high, it would have eliminated a lot of bearish case scenarios, including the WXY that I'm talking about now, to the downside. So again, once you take this high, right, this retracement is going to become very interesting. Because then you invalidate the WXY to the downside. Right? You also invalidate the contracting diagonal to the downside. Because there's also that other scenario. Okay, let me take this out. Do I still have it? Contracting C wave. Here we go. Okay, this scenario is still on the cards. Okay, let me go here onto the 4-hour time frame. Whoops. Right. There's another one. I'm not going to talk about it. That one is absolutely scary. Okay, but there's a scenario that this is an AB and your C wave, AB and your C wave is ending in a contracting diagonal. Okay. Also, if you take the high of 4, you invalidate the scenario. Right, but also if price continues to the downside and it gets acceptance back above, but this is the exact same thing almost as the WXY. The only difference is price can fall from where it is right now. It can just fall. As soon as it gets acceptance back above these lows, then it's most probably this scenario that played out. You break the trend and you're going to continue momentum to the upside. Okay, in a 1, 2, 3, 4, 5, C wave is done. ABC, corrective structure, finished. We continue back to the upside. There's a larger one where some people are saying, okay, this is the one I don't particularly want to talk about. It has a lot of mistakes inside of it, where a lot of people are seeing this as a 1, 2, okay, 3 can even extend, okay, let's just count this as 3, and then you're going to get 4 and 5. But if all of this is a contracting diagonal, and you get an ABC to the upside, you make a, you find resistance over here, you continue, this becomes a 1, 2, 3, 4, 5, you're basically in a bear market. This is where the bear market starts, right over here. Okay, luckily, there's a lot of problems with accounts inside of the structure, luckily. Okay, so it is still a scenario, but it has the most mistakes out of all the scenarios that I've just shared with you. Hence, it carries the lowest probability. Legends, remember to smash up that like button. I'm going to go through some more comments at the moment. Remember, if you'd like to come and trade with me, the links that I use are always down in the description. Okay. I organize the best deals with these exchanges so that when you trade, you benefit from the lowest trading fees and the biggest sign-up bonuses. I've got Weeks, Bluffin, and Femix. All you need is an email and a password. If you do want to verify, I do have Bybit and Mixi as well. Okay, but you could also verify yourself on these exchanges. They do have KYC options if you want to do that, but you don't have to, right? So it's your way to support the channel and for me to continue bringing you the alpha and the technical analysis on a daily basis. Okay, cool, legends. Right, let me switch off the scenario. Oh, is that trade not playing out at the moment? Let's see what's happening here. Okay, it's still hovering, not making any decisions at the moment. Okay, let's go through some more comments here at the moment. Joop, let's do this. Right. I don't trade on Weeks, but watched it live on Jason Casper's stream if you want to see during Trump's speech. Smash that like button. Yes, Mr. Junior, welcome here in the live stream. Kick me out from trade. Kick me out from trade. Yes, so, I mean, Weeks did say, and I know that they will refund you. They do have is it 1,000 Bitcoin user protect, but they do have a user protection fund. If anything happens to your trade that is caused by them, they have a form that you fill out, you submit it, the developers will go through everything just to make sure that you are telling the truth, because some people, what they do is they trade without stop losses. They liquidate their account and then they tell the exchange that your stop loss didn't trigger. And I mean, everything gets recorded onto the system. They can see whether you've put a stop loss or not. Okay, so some people do try and take chances to get money back. And but if you did have a stop loss, they will definitely refund you your cash. Right. Do you place a trend-based Fibonacci anywhere? Show us how to use it. Okay, so Satoshi, it's not an easy question to answer, and I'm going to briefly explain it, and maybe I'll dedicate a live stream to it. But Fib retracements, okay, there's a difference. You are asking about trend-based Fib, okay? Trend-based Fib is extensions. Trend-based Fib is extensions. It's this one over here, okay? And then you get Fib retracements. So let's talk about trend-based Fib, okay? It's my favorite tool. I have to be honest, it's my favorite tool. I get so many successful trades with a trend-based Fib. It is unbelievable. Okay. How I started out with trend-based Fibs is that you have a wave. Okay, so you have a wave. You have to, I mean, you need to learn to identify waves before you can use a trend-based Fib. You have a wave, you have a wave, you have another wave, and what you're trying to do with these waves is to try and see where the next wave can go to. Okay, so this wave didn't go much high, okay, but where I started, I can tell you how I started is I measured every single wave I could get my hands on. Okay, you can reverse the price action and go and back test it. That's the best way. So you've now formed a little wave over here. Now you want to see, well, how high can this wave go? You take it from the low to the high to the low. You drag it across and you can see, okay, it looks like the 786 level gets well respected. Tick. Okay, this is why I have the 786 level on my fib, because the default settings has way more settings and numbers on there. So I only have the numbers on my Fibonacci that I know works most often. Okay. A more interesting one is to say that, well, there's a trend, there's a wave over here. Okay, so you take your trend-based fib from the low to the high to the low, and look at where this one rejected at the 1-to-1 extension. Okay, this is how I started out with trend-based fib extensions. I measured each wave. Okay, it rejected here, or it rejected here, or it rejected here. And then I started noticing, oh, that 1.618, it gets the best rejections. Usually when you hit this one over here, that trade from this level is usually the best trade. Okay, this is how I started with trend-based Fibonacci's. I just measured every single wave I could get my hands on. And then as you hit each number, like here, the 786, look at it, got the rejection. There's a trade. There was a trade from that level. Okay, you come back up, then you reject at the 1-to-1 extension, you fell back to support. There was another trade. Then a chop, 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 chop. But the first two taps is usually the best taps. The first tap at that level is usually the best tap. Okay. That is basically how I started. There was no rule that I'm applying to say that it has to be from this pivot and it has to be from that pivot. There was no rules that I applied. Also to the downside, there's a wave. I just saw waves. There's a wave. Okay, I can go measure that wave. Okay. Fib from the high to the low to the high. Where did it find support? You guys can see how often the 786 level gets respected. Okay. But this was a little bit of a messy way for me to use the trend-based fib. Where it became a lot clearer for me is when I learned Elliott wave theory, because Elliott wave theory also used trend-based fibs a lot. And when I started learning the waves, 5-wave structures, 3-wave structures, ABCs, WXYs, all of those structures has specific targets. That is where the trend-based fib became more powerful to me. And that's where I learned to more effectively measure and apply it. And that I can unfortunately not teach you if you do not know Elliott wave theory. If you don't know what an ABC is, you're not going to know where your C wave targets are. If you don't know what a 5-wave structure is, you don't know where your third wave and your fifth wave can end. Okay. If you don't know what a WXY is, do you guys see? Is that you have to know Elliott wave theory before you will know exactly how to apply the trend-based fib to the waves in Elliott wave theory. But this was the simplest way that I started out, and I still traded the trend-based fib very successfully, even without knowing Elliott wave theory. Okay, often what I will do as well is, you take a trend-based fib. This is another way of doing it. I'm measuring this leg here to the upside, from the low to the high. You drag it across, you reverse it. Okay, this is another way of using the trend-based fib. Okay, so I have a leg to the upside. We are falling down. Okay, where are we going to find support? Okay, we got a small reaction at the 618. That's usually a clue that I've got the correct fib or the correct pool. Okay, we got a small little reaction at the 1-to-1. Then we got a nice little reaction here at the 1.236. Okay, and then this is where it stopped, right at the 1.382. But then when I apply this to Elliott wave theory, I know that, well, if you have an impulse to the downside, which this looks like an impulse to the downside, you could have an A, B flat, and a C back to the upside. And these are B flat targets. If you tap the 1.618, you're most probably going to continue momentum to the downside. So I've now learned to combine trend-based fibs with Elliott wave theory. So Satoshi, and for those that were wondering, that's basically how I apply it. Okay, you can also apply it on bigger structures. Okay, so like I said, you now have a big wave on the 1 hour time frame. You have a big wave over here. Okay, so you take your trend base fib from the high to the low to the high. Let me just reverse it back. Okay, now, because I know Elliott wave theory, I know that this can be an A, B, C. But remember, any three-wave target, whether it's a WXY, whether it's an ABC, it doesn't matter. Any three-wave corrective structure has the same targets. 1-to-1 extension, 1.236, 1.618. I have seen the 1.382 get tapped, but it's not really a level that I pay attention to for three-wave corrective structures. Okay, but I know that this is, because I now know Elliott wave theory, I know that this is an impulsive structure with 5 waves. 1, 2, 3, 4, 5. This can now be a corrective structure in a three-wave structure. 1-to-1, 1.236, 1.618. Okay, these are the levels that I'm now currently watching, and I can successfully trade them. Okay, cool. I've spent a lot of time on that little question over there. I hope I've explained it as best as I possibly could. Right, let's go. Oops. Is it this one over here? Right, let's go. Let's go. Instead of stressing with, okay, I've done that. Right, let's scroll here to the bottom. I don't think this channel is for making quick cash, brother. More of a school. Yes, definitely. Some Pete. My channel is not, you know, if you want to go and FOMO in with other traders into trades and go with a hype or whatever the case might be, okay, it's not my channel. My purpose here, and the reason I started the channel, is to teach you what I know about trading so that you can catch fish for yourself. Okay, there's that saying, stupid old saying that says, teach someone to fish and they can eat for a lifetime. Give someone a fish and they will eat for today, right? So my goal is to teach you how to fish so that you don't have to watch anyone else once you've developed your trading strategy. So I'm showering you with as much knowledge as I possibly can so that you can learn to trade by yourself without having to belong to a signals group or follow someone to know where to place your trades, so that you can do it yourself. I mean, that is power, right? That is power. Teach someone to do it themselves. For me, that is phenomenal power. Right, so yeah, I mean, if you're following my YouTube channel to make a quick buck, it's not the place, okay? Definitely not the place. Right, thanks for this, Irina. Absolute welcome. Hello, Sir Dewald, Rolling Walnut. Hey, I haven't seen you here in a while. Welcome, welcome. Or maybe I just haven't read through all the comments. Okay, I don't have to be here, just be on your way. Right. After the 5-wave move, then the correction, what next impulse? Satoshi, oh, so that's what you're basically saying. So in the bullish case scenario, let me put myself back. Right, there we go. I'm not sure. Let me know in the comments if you guys do prefer this for me to go through future comments, or if you prefer for me to stay on this screen and just go through the comments like this, okay, and pop them up on the screen. I don't know. I'm trying different things. Okay, and it's about you at the end of the day. Which ones do you prefer? And I will stick with those ones. Right. So let's put on our bullish caps, our bullish hats, and say, okay, the low is in. This is a bullish structure and a 5-wave structure, and this is a 3-wave corrective structure. And the 1.236 does look the best. Okay, second one I think better. I like both. Do you think ETH will even reach 4K? Yes, but I think it's going to go to 1.5 first. I like the chat view. Okay, also like the chat view. Yes, it's something I put together this morning. I was playing around with the settings on my software and I saw I could do this, right? Where I could show everyone the comments that I'm going through. And I thought this was quite a nifty tool. I just wanted to see if you guys like it as well. Right. Anyways, let me put myself back here on the screen. Okay, let's put our bullish hats on over here. Let's say the structure is going to play out to perfection. Okay. What I would like to see from a perfection perspective is for us to come and tap the 2.36. When you take a fib retracement from the low to the high, okay, it has perfect confluence with the 786. This is the level that's usually a nice target for a second wave. So this is now 1, this is 2, because you have 5 waves in 1. You have a 3-wave corrective structure in 2. Okay, now I need to zoom out a little bit because I need to give the structure a little bit of room. If this is going to play out, your structure is going to look like this. 1, 2, 3, 4, 5. Okay, now you take your trend-based fib from the low to the high of 1 to the low of 2. So we're just putting it there because we're saying this is how it's going to play out. Your most common target for a third wave is the 1.618. But your third waves does not have a specific target. They just love 618 targets. It can go 1.618, 2.618, 3.618, 4. They can absolutely rock and roll to the upside. But the most common minimum target for a third wave is the 1.618. Then you form a 4 and then you go up for a fifth wave that usually taps the 2 extension. So that is what the structure will look like, but it doesn't end there. After you now have formed your 5-wave structure, you get a 3-wave corrective structure. Like what's happening, it's repeating itself. Can you see? 5 waves, 3 wave. You're going to get 1, 2, 3, 4, 5. 3 waves. You're going to get 1, 2, 3, 4, 5. Okay? And you're going to get, now once you get to 5, then you get a 3-wave structure that corrects the entire impulse. Like this one over here is correcting the entire impulse inside of the first wave. This one is correcting this impulse. But when you get to 5, the corrective structure corrects the entire impulse. You then form a higher low, and now I need to zoom out a little bit more. Okay, this is how bullish the structure can get. Now this becomes, okay, just depends on how bullish this is going to get. Now this becomes 1, 2, 3, 4, 5. That is why impulses are so beautiful. They can just build and build and build, and then, you know, I'm sure that the penny should be dropping at the moment. You can also then get that ABC. You can get an ABC, and guess what? This now becomes a 1, 2. It just becomes bigger and bigger, and that is how you form a bull market. This is how all of this has formed here to the upside. From the tippy bottom over here, okay, you had 1, 2, 3, 4, 5, A, B, C. Okay, so here you had your first wave. You had 1, 2. Inside of each wave, 1, 2, 3, 4, 5, however you want to count it, you had 5 waves. You guys get the picture. Now you have 1, 2, 3, 4, 5. And this is why everyone is now calling for the bear market. You have completed 5 waves to the upside. Okay, right. But basically, I think I have answered your question just to show you that, well, I have my theories about this structure. I have discussed it in length this morning or yesterday as well. Okay, so basically, this is how high this can go if the structure is bullish. The low is in. This is a 3-wave corrective structure. I've got my bullish hat on now. Remember, we're just playing out the perfect case scenario over here, and I can just clean up the Fibonacci's, but basically, this is what you will be looking at. If the low is in, this is wave 1, 2, 3, 4, 5 in your bigger wave 1. You go back, you create a higher low, and now you go back up for, remember, the bigger the third wave, because this is a small little third wave, it's a third wave inside of your first wave. Once you make a higher low over here, it's usually these third waves that are the most aggressive, the most impulsive. It's the wave that leaves everyone behind. You even struggle to get in because it just goes, okay, like this. It just goes. It doesn't give you a chance to get in. Okay, then you create another 4 and a 5. And, you know, maybe you get an ABC and it continues. I don't know, right? We don't know yet. It can just build and build and build and build and build. Okay. Right. Cool. Now that I've answered that question, I can take this all out. Let me go through some more comments. Remember to smash up that like button, legends. Okay. Is the daily level at 81.85 a good support? 81.85. Let's go back here onto the 1 hour time frame. Let's check it. Let's check it out. Okay. Let me put myself back here. Let me switch on my daily levels. 81.85. Well, that daily level. Okay. Let me just do this. That daily level has confluence when I do a fib, trend-based fib from this high to this low to this high. The 1-to-1 and the daily level does have confluence. Okay. So it can either be the low, it gets the choppiness and it gets acceptance back above and it breaks out. Okay. The scenario that I would like to see, okay, because of the structure here to the downside, it looks like it's unfinished business. I think we potentially are going to get a bounce here, but I do think that we are going to go down again. Okay, you're going to roll over. This is the zone that I like the most because this is the leg that's going to scare the crap out of everyone. The bear market is back. Look how close you're coming to this low. We are going sub $76,000. Most people are too scared to long the 786 level because of how aggressive it gets to the downside and how close it gets to the low. So I don't always get what I want, but if I had to have my way, I would like to see a bounce here. Okay, I will definitely be looking for shorts. But if the structure is going to remain bullish, this is where the bounce has to take place. It has to take place here. If the bounce does not take place here, you're going to the 1.618, which means you're going to double bottom. Choop. Okay, and this is where I'll be looking for a long. But now you have invalidated the bullish structure. So it needs to build this again. A 1-2. It needs to build a 1-2 again. Once you take the low, it has to build a 1-2 again before you can get a nice third wave. And it's the third waves that are the best waves to get into. So it would need to build another impulsive structure, make a higher low and continue momentum to the upside. Right. Let me do this here quick. Okay. What do you think about coming to the death cross in the day on the daily time frame? Yes, I see everyone talking about the death cross, and I think maybe that's also why that WXY corrective structure that I've highlighted is maybe carrying high probability. Remember that the death cross is a lagging indicator, okay? And the death cross usually signals damage that has already been done or is almost finished. Okay, so I wouldn't be surprised if we're going to get the WXY to the downside. I think that would be the death cross playing out over here, right? But I do think that the probabilities are still higher to go and take the high before we take the low over here. Probabilities are still higher to do that for now, based on the structure that we have formed to the downside. Because, you know, when you go, let's go to the 12-hour time frame and you go and look at all the previous bear markets, how they started impulsively to the downside. Look at when this bear market started. It was an impulse to the downside. 5-wave structure, 1, 2, 3, 4, 5. Clear 5-wave structure. It respected the rules of Elliott wave theory. You have a 3-wave corrective structure and you continue. Okay, so it started, if you zoom in here onto the 1 hour or 15-minute time frame, it is aggressive here to the downside. Beautiful 1, 2, 3, 4, 5 wave structure in the first wave to the downside. Okay, from an Elliott wave perspective, okay, it was almost crystal clear that you are going to continue momentum to the downside. This structure here to the downside does not count impulsive. It is very, it's very overlappy. It doesn't follow 1, 2, 3, 4, 5. You don't have a clear impulse to the downside. It's very overlappy. It's contracting. It's not a beautiful way to start impulses to the downside. Okay, which tells me that this is more than likely a corrective structure for this impulse. It's going to find its feet at some point and it's going to attempt for the top again. So for me, for now, this top still carries the highest probability regardless of what happens over here. Let's go back. Here we go. Can the D be in at the recent SFP? Anthony, D be in. Let's go and check it out. Right. Yes, it can. The only rule is that D has to take the low. And it did. By a hair, by a couple of dollars, it took the low. That's the rule. So there's a chance that the D could be in. So yes, the D could be in. The fact that it didn't tap a proper level concerns me, because you have to always go into the smaller time frame and just look at the structure. Okay, if this is an A, B, C to the downside, it didn't tap any fib levels, proper fib levels. A, B, C. Okay, it didn't tap a proper fib level for a three-wave structure. Is usually your minimum target over here, your 1-to-1 extension. Is there a chance for the D to be in? The rule states it has to take the low. It did by a couple of dollars, so it's valid. I'm just concerned because you didn't tap at least a proper Fibonacci level to the downside, which tells me that maybe even with the bounce, you're still going to come tap one of these levels properly, either the 1-to-1 or the 1.236. Trend-based fib levels for me gets more, it gets respected more often than other tools that I use. It's the one tool that's never disappointed me, or disappoints me the least amount of times, the least amount of times. Okay, right. But to answer your question, yes, there's a chance that D could be in. Definitely a chance. Based on CVD, it doesn't look great. Okay. But I mean, there's a chance. There's a chance. Okay, isn't it that one speculative this shit all wake up and feel buying and selling today, and everybody is coming over to the wave 1 and 3 and 9 structures and bounces rebound? Okay, right. I'm not sure what to make of that comment. Would be interesting to see your take on Ondo. Right. I'm not going to have any time to do altcoin requests over here. What I can do is just quickly highlight ETH. I have spoken about ETH. Okay, just quickly I want to highlight, just looking at the local structure over here, if you take a fib, right, if you take a fib from the low to the high, we have officially double bottomed. We did not take the low, we front run it by a couple of dollars. But because we are so low and we've tapped the 0.88, I just need to change that. I need to switch off my 0.9. Okay. The zone here to the downside, if I go here onto the 12-hour time frame, the local structure here doesn't look like a great... Okay, one could argue double bottom. It's going to go. There's a chance. Okay, you've made a double bottom. It's going to go. I do like this zone the most, because this zone is a Y wave target and a C wave target. which has not been tapped yet. So it would be nice for ETH to still come down in this zone over here. Can it front run? Yes. This is why I started buying ETH a little bit. I'm not aggressive with my buying yet, but I'm going to be a little bit more aggressive over here with my buying. Okay, because I'm aware that this could front run. And if it comes into my buy zone, I will be a little bit more aggressive. Okay, and this is why I wrote, this is a C wave and a Y wave target. Looking at this entire structure on the daily time frame. Okay, W, X, Y, A, B, C, and W. Complex corrective structure in X and a simple A, B, C in Y. And then this A, B, C, okay, there's your C wave target, which has not been tapped yet. Okay, Dewald, AR has touched the 0.88. I know. But I do have an exit plan. If you have watched my live stream yesterday, okay, I need to stress to everyone, okay, the zero, well, it hasn't tapped it on the logarithmic scale, okay, so there's a chance it hasn't tapped it on the logarithmic scale, but the point that I was trying to make over here is the following. In Elliott wave theory, it states when you tap the 0.88, well, it's more from a backtesting perspective, but regardless, when you tap the 0.88, you increase the probabilities of taking the low, but it's not an invalidation for a second wave. The only invalidation for a second wave is that your correction is even allowed to retrace 99.9% of your impulse. It's just not allowed to take the low. It can literally fall, and just before it takes the low, if it turns around and it shoots up, it can still be a second wave. Taking the low is the only invalidation. Tapping the 0.88 increases the probabilities of taking the low, but it's not guaranteed. You guys hear what I'm trying to say over here? And I can tell you now, I do have a spot back in AR, and I've told everyone that I am bullish on AR until the structure is invalidated. I do not have a stop loss, because it's a spot bag. Okay, I will actually add more. That's part of the strategy. You actually need to buy more when you go down lower. But I know, okay, with high probability, if AR takes the low, I don't want to lose cash and be in a loss and take the loss. I know that at some point it's going to bounce and give me a relief rally, and this is where I'm getting out. If AR takes the low, that is where I'm getting out. If AR does not take the low and it finds support before it takes the low, I have much higher targets where I'm going to cash out. So my trading strategy changes depending on what the structure shows me. I'm not going to take a loss over here. There's no ways in hell I'm taking a loss. Okay, because I know it's going to recover, make a lower high, and continue momentum to the downside. That's where I'm getting out. And I can still get out with profits. With way less profits, but still with profits without taking a loss. That is my strategy. This is no financial advice. That is how I trade the markets. Okay, often when I see an invalidation, I will go work out the structures, and there's a high chance you can bounce here at the 1.618, get a bounce to the upside. How often has it happened? You guys can let me know in the comments. How often has it happened to you? Okay, let's pretend that this is the 5-minute time frame. How often has it happened that you have a stop loss over here? Yes, and it looks like it wants to go, and it does that. How often have you seen that? And then the comments or the thinking that goes through your brain is like, it damn well just stopped me out and now it's going. It did exactly what I wanted to do, but now it's stop loss hunt me. It's not going to stop loss hunt me. Okay, I would rather see this and get out when we hit resistance. Right, cool. Or BTC 250 or Dewald 10K first. 250, you go. I don't think we'll ever see 10K on Bitcoin ever again. Right. Or Dewald 10K or ETH 10K first. Well, it's the same. I think, I don't know if ETH is going to hit 10K, but I would have to go with 10K on ETH because I don't think Bitcoin will ever hit 10K again. Okay. Why do I say that? If you look at Bitcoin here on the daily time frame, okay, let me just clean up everything. Delete that. Hide the structure. Okay. Remember what I said about a 5-wave impulsive structure. I personally do not think ETH is going to see $15,000 again, because you have formed a 1, 2, 3, 4, 5. So even if the bear market is starting at the moment, now we put our bearish hats on. What do you see after a 5-wave impulsive structure that's taken 3 years to form? Okay, the larger the time frame, the more accurate the analysis becomes. So if this is forming an A, B, C here to the downside, you expect the structure to form a higher low because you have 5 impulsive waves to the upside. Impulses, 3-wave corrective structure, and guess what you get after this bad boy over here? What do you get after that? You now get a 1, 2, 3. 3. It's a macro 3. It's going to go very high. 4, 5. Okay. And once you get to like $300, $400, $500,000 Bitcoin, the probabilities of going down to $10,000, it becomes almost non-existent unless something really, really, really bad in the economy happens. Okay, maybe an earthquake that shatters the world, or World War III breaks out. Okay, like real traumatic events that impacts the entire world needs to happen for Bitcoin and risk on assets like the S&P 500 and the Nasdaq to take 100% dump to the downside, or a 200% dump to the downside. Okay, right. BTC breaking trend. What is happening there more locally? Let me do this. Oh, so it's still continuing. That trade is still intact. Right. Okay. Remember, guys, resistance to the upside. Where were we? Did I delete? I think I deleted all these. Oh, there we go. That was the breakout. Ooh. It actually stopped out. Tapped the 7. Where did it bounce? Almost. Golden zone. This is the golden zone between the 618 and 786, and this is the golden pocket. I see a lot of people get confused between the two. This is a golden pocket, and this is referred to as the golden zone. Okay, so it got the bounce in the golden zone, but it still did not get acceptance back inside the trend. And now it's gunning for the highs over here. So there's a chance, legends, there's a chance that this structure... Okay, let's look at the structure quickly. There's a chance that this is your impulse to the downside. What if this is a 1? It's still going up for a 2, and it's still going to go 3, 4, 5. And this, there's so many ways to count the structure. This could be an ABC flat that's now going up for a C wave to complete your second wave. And then you're going to get a 3. And a 4 and a 5. I don't particularly like this structure because of how deep it goes to the bottom. I would rather want to see a 535. Okay, you might be asking yourself, what on earth is a 535, Dewald? It's a 3-wave structure. So you have 5 waves here to the downside. 1, 2, 3, 4, 5. You have a 3-wave corrective structure. 1, 2, 3, wherever it ends, okay, and then you have another 5 waves, 1, 2, 3, 4, 5. So then you form a 5, 3, 5, and it's a 3-wave structure that doesn't go as deep as the one that I've just painted, where this becomes 1, 2, 3, 4, 5. Because if it's going to form a 1, 2, 3, 4, 5, it's most likely going to take the low at $76,000. If it forms a 3-wave structure, 5, 3, 5, there's a chance that it could bounce there at that daily level at the 786. I really like that level. Let me switch it on here quickly. Okay, this daily level at $78,000, I like it. I like it a lot. I really like that daily level. Okay. If I go here on to the 15-minute, I'm going to have to go to the 1 hour to measure the structure. Okay, so trend-based fib from the low to the high. Might not even get to that daily level, okay? But you have the 786 and the daily level over here without tapping the 0.8. I like this zone for this to be an A, B, C, okay, or a W, X, Y. However, a three-wave structure, okay? I think if it's going to build, it's not going to be pretty. Right? If this is a wave 1, if this is a wave 1 here to the downside, and this is an A, B, C, okay, I can go and try and predict where this could end. Yeesh, yeesh. Can you see where the 1.618 is? So you basically, you need a very, very, very deep 2. If this is 1 and it's going to form a 2 over here to go down for a third wave, you want the retracement to be as deep as high as possible, okay, so that the 1.618 moves up. Because the shallower the wave 2, the deeper your wave 3 is going to go. Can you see it's already there at $72,000 if I put it here by the 382. Okay, so you want your second wave to actually be very deep if this is going to form a 5-wave structure to the downside. 1, 2, 3, 4, 5. Can go as low as $70,000. Okay, right. Dewald, Back to the Future, how to use Fibonacci retracement, why do you reverse them, etc. Satoshi, yeah, I really recommend that you need to go and Google and ChatGPT. We've got all these AI tools available to us. Often, even when I get stuck with Elliott wave theory, it is such a complicated trading method, okay? Fib retracements, Fibonacci, Elliott wave theory, volume trading, breakout strategy. You can ask these questions inside of Google, YouTube, and ChatGPT, and it will teach you how to use these things. You don't have to purely rely on me to give you that education. Okay, right. There's a lot of people inside of the stream that does understand most of everything that I'm saying, and it's not fair towards those people when I am discussing things that they all understand. Then people just drop off the stream. What I can do is post some educational content, and if you're not interested in it, you don't have to watch it. But I don't want to necessarily go through it in a live stream, because I have seen when I go through simple things that most people understand, people drop off the live streams. So not something, you know, we all know, you know, if you all you need to know in life to do anything is, can you Google? Can you use ChatGPT? Can you watch YouTube? Do you have Wi-Fi? Do you have internet? It's amazing what you can do with internet. You can find out anything. There are hundreds and thousands of videos on how to do Fibonacci retracements, Elliott wave theory. There's websites dedicated to it. Okay, I educate as much as I possibly can. And right, I just don't, you know, I'm always trying to find the balance between not boring the rest of the crowd versus questions that you can go and search for yourself, if that makes sense. I'm not trying to beat you down or anything like that, but I can see I'm monitoring the views, and as soon as I start talking about specific things and I see the viewers drop off, I try and change the subject to keep most people engaged and interested, okay, in what I'm trying to highlight over here. Right. Legends, thank you so much. How long have... It's already an hour and a half. I was only planning to do a short little live stream. Legends, I hope you have enjoyed this live stream as much as I did. We learned together, always educating, okay? And remember, the links for the exchanges that I use is down in the description. It's also your way to support the channel. It costs you nothing extra, and you qualify for the best deals and bonuses and lowest trading fees. Legends, I will see you all tomorrow. I believe it's Friday tomorrow, right? Hopefully my voice is better by tomorrow. I can already feel my voice sounds like it's getting a little bit better. Have yourselves a great evening, afternoon, or morning from wherever you are from around the world. Until the next one, cheers for now.